Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Mark Marex, Senior Index Specialist with Nasdaq Index Research, to discuss Nasdaq-100 performance for the first half of 2021. We'll take a look at some of the contributors as well as equity ETF fund flows. Mark, it's great to see you in front of this holiday weekend. Welcome back to Trade Talks.
Thank you, Jill. Great to be back.
All right, let's talk about that first half of 2021. We saw a little bit of volatility, but it really did come back pretty strong the last couple of weeks of June.
It really has. June, we were up over 6% on the Nasdaq-100. You can see in the light blue, we are up year to date through end of June, almost 13%, 12.9%. That's actually beating the Dow Industrials average, up only 12.7%. I'd venture to say that this long-running reflation trade, which has been on since about end of 3Q last year to around Election Day last year, it is deflating a little bit. We've really seen over the last couple weeks a rotation back out of a lot of the value and cyclical names, which had been really hot, really outperforming for the better part of the last 6 to 8 months. And you could see some of that catch up in the Nasdaq-100 performance. The S&P up 14.4% through the first half of the year. There were expectations that that index would perhaps way outperform the Nasdaq-100 this year. After underperforming by over 30 percentage points last year. We just haven't seen it yet this year, Jill.
All right, let's take a look at some of the individual contributors and sectors that lended to this performance.
Yeah, so what I've done here is broken out, in blue, you can see the average index weight within the Nasdaq-100 by component, and then the percent of the total 13% return that each of these components has contributed. So, Alphabet, the biggest contributor here, about 1/5 of the index's total performance in the first half of the year. That company was up 41%. It's been averaging around 7% of the index. And then rounding out the rest of the top 10, some names you probably won't be surprised by: Microsoft, Facebook, NVIDIA on a tear. That's the second best performer behind Moderna in these top 10 index contributors. And then you can see even some names like Amazon and Apple up only 6% and 4% respectively in the first 6 months, still in the top 10 contributors to the index overall return, just because they are, two of the biggest weightings. They're still positive. And then you can see some summary stats for the top 10 there. These 10 names contributed 72%, almost 3/4 of all the return for the index in the first half of the year.
And Mark, if we take a look at our final slide here, when you look at equity ETF inflows, I was surprised to see just how much blended leads the pack. I guess it shows that investors are looking to manage their risk with overexposure or concentration to one area or the other.
And let's take a look at the next slide, which shows you the sector view. Maybe not as big of a surprise here that technology, which is average just over half of the index weight, on average was up about 19%. That's just as good as healthcare, actually. So tech as a sector overall not performing that much better than some of the rest of the bigger sectors of the Nasdaq-100, but still good enough to drive around 75% of that overall index return.
And Mark, if we take a look at our last slide here, when we look at U.S. listed equity ETF fund flow, I was surprised to see just how concentrated it was with blended ETFs. It seems as if investors don't want that concentration risk to one area or the other.
Yeah, I mean, the blend is kind of a catch-all field. This is data out of Bloomberg, and people might guess that the Nasdaq-100 ETF, the Qs, actually falls into growth here. It doesn't. It falls into blend. Kind of surprises me every time I look at that. The big story, I think, the first half of the year has been value, which was up almost $50 billion in terms of inflows, the best 6 months of flows I was able to see over almost 20 years of history. But I mean, really, I think it's overshadowed by just the overall tremendous performance of the US equity ETF space, almost 350 billion in flows this first half of the year. That's almost double the prior record, which was in the second half of 2016. So, whether it's value outperforming and reflation being the trade, or rotating back into tech and growth, The flows are strong throughout, multiple areas, and that's encouraging in terms of continued equity outperformance for maybe the second half of the year.
All right, Mark, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.